QuickBooks Cleanup, the 3 reports that reveal your messy books. Hey, Bookkeeping Coach family, it's Bev. Pop quiz. Do you know if your QuickBooks is a mess right now? And I don't mean, well, I'm a little behind on reconciliations. I mean truly messy. Like if your CPA opened your file tomorrow, would they charge you double because they have to fix everything first? Here's the truth. Most people don't know their books are messy until tax time. And by then, it's expensive and stressful to fix. But I'm going to show you 3 reports that will reveal everything wrong in about 15 minutes. Why these 3 specific reports? Because they show you the mistakes that actually cost you money and credibility. The audit log shows you what's been changed or deleted. This is your trust but verify report. The reconciliation discrepancy report shows you where your bank reconciliations went wrong. And trust me, if your reconciliations are off, nothing else matters. And the voided deleted transaction summary shows you what's disappeared from your books, which could be mistakes or, as we talked about in my fraud video, something more serious. These reports are like a diagnostic test at the doctor's office. They don't fix the problems, but they tell you exactly what's wrong, so you can create a treatment plan. Let's start with the audit log. This is hands down the most powerful report in QuickBooks Online, and most people don't even know that it exists. Here's how to access it. If you click the gear icon in the upper right, then Audit Log under Tools, you'll see every single change made to your QuickBooks file, who made it, when, and what they changed. Now, what are you looking for? First, multiple changes to the same transaction. If you see that invoice 1234 was created, then modified 3 times in one day, something's weird. Click on it to see what changed. Was it the amount, the date, the customer name? Second, deleted transactions. Sort by event type and look for deleted. Every deleted transaction should have a good reason. If your bookkeeper is deleting transactions regularly, that's a red flag, and we covered why in the fraud audit video. Third, changes made by people who shouldn't have access. If you see your receptionist editing vendor bills or your salesperson adjusting invoices, your user permissions are wrong. Here's what clean books look like in the audit log. Minimal changes, logical patterns, and transparency. Messy books? The audit log looks like a crime scene. For business owners, review your audit log monthly. Set a calendar reminder. For new bookkeepers, include an audit log review in your month-end close checklist. Screenshot anything concerning and keep it in your client file. All right, report number 2, the reconciliation discrepancy report. This one makes grown adults cry, and I'm not exaggerating. Here's what this report does. It shows you transactions that were reconciled, then later changed or deleted. And when that happens, your entire reconciliation is wrong, which means your financial statements are wrong, which means your tax return might be wrong. See why this matters? To access it, go to the report section and search reconciliation discrepancy. Select your bank account and enter the date range. I recommend running it for the entire year right now. What you're looking for? Any transaction that shows up on this report, the difference between the original amount and the new amount. Who made the change? Here's a real example. I took on a new client whose reconciliation discrepancy report showed 47 transactions. 47! Turns out their previous bookkeeper would reconcile the account, then realize she forgot to enter some bills, so she'd backdate them. Every backdated transaction threw off the reconciliation. What's the fix? You have to decide. Do you undo the reconciliation and redo it correctly? Or do you make an adjusting journal entry to fix the discrepancy? For anything over $100, I recommend undoing and redoing. Under $100, adjust and move on. For my new bookkeepers, if you see a reconciliation discrepancy report that's longer than 5 transactions, you need to have a come to Jesus conversation with your client about cleanup fees. This is not normal maintenance. This is reconstructive surgery. Report number 3 is the voided and deleted transaction summary. I call this the ghost report because it shows you what used to be in your books, but isn't anymore. Access it by going to Reports, search voided/deleted, and select all dates because you want to see everything. This report shows 2 things. 1, transactions that were voided. They still exist in QuickBooks, but have 0 impact. And 2, transactions that were deleted, completely gone from QuickBooks. Now, voided transactions aren't always bad. Sometimes you create a check by mistake and need to void it. Totally normal. But patterns of voiding, that's concerning. Here's what to look for. Excessive voids. If you see 10 plus voided checks in a month, someone doesn't know what they're doing, or they're hiding something. Deleted deposits? This is a huge red flag. Why would anyone delete a deposit? The only legitimate reason is if it was entered twice by mistake. But if deposits are being regularly deleted, you need to investigate immediately. Voided invoices without credit memos? If a customer returns something or you need to cancel an invoice, you should issue a credit memo, not void the invoice. Voiding erases the paper trail. Here's the comparison between clean and messy. Clean books, the report has maybe 2 to 5 entries per year, all with clear explanations. Messy books, the report has dozens of entries, no patterns, random dates, and when you ask about them, nobody remembers why. Let me show you what these 3 reports look like in clean versus messy books. Clean books, the audit log has minimal entries, mostly from 1 or 2 users, logical changes like correcting typos or updating addresses. For the reconciliation discrepancy report, blank or just 1 to 2 entries per year with small amounts. The voided and deleted report, maybe 3 to 5 entries all year, clear reasons. Now, messy books, the audit log had hundreds of changes, multiple users, transactions edited days or weeks after creation, deletion transactions with no explanation. The reconciliation discrepancy report, pages of transactions and amounts that don't match, changes made after reconciliation. Voided deleted report, dozens of voided checks, deleted deposits, patterns of weekend deletions. If your reports look like the messy example, don't panic, you're not alone, but you do need a cleanup before year end. Here's your action plan. Step 1, run all 3 reports today. Print them or save them as PDFs and date them. Step 2, for each issue you find, create a list. What's wrong? Why does it matter? What's the priority level, high, medium, or low? And step 3, decide if this is DIY or hire it out work. If you have more than 20 total issues across all 3 reports, hire help. Seriously. Step 4, block cleanup time on your calendar. For minor issues, maybe 3 to 4 hours. Major disasters, you might need more than 20 or professional help. Step 5, set up systems to prevent future messes. Lock periods after reconciliation. Limit user access. Do monthly audit log reviews. Require explanations for all voids and deletes. For new bookkeepers, use these 3 reports during every client onboarding. Include them in your proposal as QuickBooks Diagnostic Review and charge for it. This is how you differentiate yourself from cheap bookkeepers to professional ones. Remember, messy books aren't a character flaw. They're usually just a lack of knowledge or systems. But now you know exactly how to diagnose the problem. If you want my QuickBooks cleanup checklist with step-by-step instructions for fixing every common issue, grab it in the description below. And if you're a business owner who just realized your books are a disaster, don't stress. It's literally what I do. Reach out and let's get you cleaned up before year end. Subscribe, drop a comment telling me which report scared you the most, and I'll see you in the next video.